Yo, 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 welcome to the show.
Hello everyone, what is up? It is Sunday, March 17th, 4:42 p.m. Eastern Standard. Gonna look at my Robinhood portfolio, my taxable portfolio, and we're just gonna talk about the reason why I have turned off my dividend reinvestment program, my DRIP. Is it program or plan? Honestly, I don't really know, but I just turned my drip off. So pretty much that thing that I'll talk about it in a second. Getting into the video, thanks everyone who has been liking and subscribing. Appreciate that a lot. Honestly, so much. I'm at 66 subscribers now, and I think like 33% of that has happened in the last 28 days, at least according to my stats. And that's just crazy. I feel like I've been putting a little bit more effort into my videos, and I just love that. So thank you, everyone. If you don't mind hitting the like button right now, dropping a comment on whatever you want. I don't really have any preference, but thanks to everyone, and let's get into our video. So it's Sunday. We're up on today, $6.85, less than even a tenth of a percent. Down on the week. Really thanks to Tesla and Under Armour, 1.4%. We should be down on the month. One month we're down 1%, 123 bucks. 3 months super down, 2.5%. Tesla and Under Armour, I would say. And also, I mean, the markets have been falling a little bit. Year to date, down 2.72%, way behind the SPY. I don't even know. And 1 year we're up 10.3%. Doesn't really even feel that good anymore because we're down so much year to date when everything else is up. But you see our holdings here still got that Ford call until June. And I bought an Under Armour call. I could talk about this for a little bit. So Under Armour took a pretty deep dive. I think it was Thursday afternoon. Their old CEO, I don't remember his name. But he is coming back, and I don't know much about the guy, Kevin Plank. Oh yeah, now they're saying he's the wrong choice for CEO. But on Thursday, this guy was coming back as a CEO, and that sent the stock like way up for a little bit, and then the day after, or really the same afternoon, it just tanked. It was slow. Under Armour was doing pretty good, making slow, steady strides up. It did come down here, but yeah, Under Armour has been doing pretty well in terms of getting back to my cost basis, but now it's like way back in the high sixes, low sevens, which is just a little bit depressing. Geez, we were down like 200 and something at one point. Now we're down almost 500 again. I've been thinking about selling and just like putting everything in like SPY or SCHD or like Costco. Really looking into Costco. Same with my Tesla holdings. Tesla is another beast I should talk about um, right here. But just taking my capital from these things that they do have potential, but something that I'm putting into something that I think has more secure or more sure potential, if that makes sense. Tesla finally in the red, like officially, after being up maybe 60, 70% at some point, didn't sell. Instead, I bought more. We're looking at like 7 shares, let's just say. Um, Down, let's say 1%, which is, I mean, pretty sad. I Apparently Tesla has been lower than this in 2023, right? Actually, the end of 2022, like this period, I didn't even know because I wasn't paying attention to the markets. I was working an internship and I was just so busy. But I guess I got through this. We made it all the way back up here. I think I just want to hold Tesla. If anything, maybe buy more. Everything really kind of hangs on how they do with their earnings and their numbers and everything. And I mean, Tesla has been overvalued, but it's also one of those stocks where people just buy into it. It's borderline a meme stock in some regard, let's be honest. So Considering selling, buying into something like just something more firm, but also considering holding, just seeing how it goes. It just sucks I have so much of my portfolio in it. It's 10%. Let's say it does go to $100. Like I'm losing $60 a share. Seven shares. That's $420. I mean, I don't know, man. I'm not sure, not sure. But we still believe in the company. I think EV wise, they will hold that number one spot. I mean, there's just something, and that could be my bias. I can 100% admit to that, but I just think it does have its fair place in the future of automotive and electrification and autonomy and all that. I think it's still here. It still will be there. Anyway, that's been the portfolio. My Under Armour call that I sold, if you've been following with these updates, that expired on Friday. I bought into a call, a $10 call expiring in July 7/19. I think it was like 15 bucks for it. Reason for doing that is because I do see some potential, like a lot of upside potential. Like I was reading a little bit up into this guy, Kevin Plank, and I see him having potential to turn the company into turn it upwards, like move it to elevate the company. So I it was 15 bucks. I mean, I'm already in the hole for 156. I didn't think I should have used that time to sell a call against my 100 shares just in case there's like a huge well, not necessarily a correction, but like going back to the old price. I don't want to like put myself in that situation. So I felt like selling a 15 or buying a $15 call might help, but that's a better hedge in my opinion. Other than that, not much has actually. I do be buying stocks like a couple times every week, so a lot has changed slowly but surely. I haven't sold anything major though. Haven't sold anything period. Just been buying more. Looking into slowly selling out of some shares or out of some positions, but we're just working our way to that. It feels like such a not a chore, but such a big step to take. And I'm quite hesitant to do it. I'm not sure why. But yeah, the next part of the video is why I turned off my drip. So let's just look at this settings here. Investing. Yeah, drip. Turn that off. Drip, dividend, reinvestment, drip. What's the IP then? I don't know. Automatically reinvest cash dividend payments into additional shares of the underlying stock or fund. So pretty much, if you have like 100 shares of realty income, you'd get 200, you get $25, $26 each month. With the drip on, that money gets reinvested into the same stock, ETF, whatever. In this case, realty income is you're gonna buy. That's roughly half a share of realty income. So those $25 that was given as a dividend, that's gonna go back and buy more shares of realty income. That's the idea of drip. So that the next time you get a dividend payment from that company, realty income, it's gonna be a higher dividend, assuming all things stay equal or improve. It's gonna be more bang for your buck, and it that all happens automatically. That's the idea of drip. So I turned that off. The reason I did turn that off, well, I can talk about a couple things. I am not at the point yet where my dividend reinvestment is moving mountains or even moving like sand grains, honestly, because I'm reinvesting like $2, like 93 cents, like 37 cents in dividends. And of course, like the stock price or the ETF price is in the 200s or could be worth $6 to $7. So am I buying even a hundredth of a shares? In some cases, yes, in some cases, no. But that's one of the reasons. And I feel like well, not that I feel like, I know that whenever I invest into these stocks before their next payment, I I diligently and decisively and I deliberately invest more than that dividend payment would have bought. So let's say realty income, I usually get paid like at this point $2.60. When it comes time to buy realty income again before the next dividend, before the next ex-div date or record date or whatever, I'm buying, let's say, $15 worth of realty income. So, of course, I could have done that with my dividend payment. I could have bought like $2.60 and bought, the remainder $12.40 with my own cash externally. But, like it's just not like that for me. And this is a good segue into the next reason. I like having that small little chunk of like buying power in my brokerage account because I have these little things down here. Look at them. They're called recurring investments. Of course, my computer is super slow, so it's loading. I have these things going on, right? Most of them, well, two out of the three of them, I have as my pull the funds from my buying power. So I like having, that little $10 of like cushion where I can use the money that I have made from my dividends to buy other stuff. So it's not like I'm taking my dividends that I'm not reinvesting and just like, taking it and buying materialistic things with them, I guess. Like I'm not using it to pay bills, at least definitely not at that level as yet. And I'm using it to buy into more stocks, not necessarily things that pay dividends. So maybe, sure, possibly shooting myself in the foot a little bit there. But then again, like I said, I do go and reinvest more money externally into those underlying positions. So, yeah, I just use the money that I make in dividends. It comes straight to my buying power, and then from my buying power into these. Most of them are daily. IGPT, which is just like an AI ETF, that kind of thing. I feel like it's something I should be in. I buy this once every Tuesday. $5 worth of that. Sweet Green and O'Reilly. I do that daily, and they're all really strong positions so far. Sweet Green is just I see so much potential for that, and funny enough, I learned about that company from a YouTuber, and then I was talking about it with my girlfriend, and apparently she knows a lot about it. Of course, she would know about that kind of thing. But I like the concept. It's not where I am. Like I've never had it myself, never experienced it, but I've heard good things about it. It's one of those things where you're not really sure where it will be in the future, but it's like you have that hunch that it will be a very future proof company based on just how society thinks in this present moment and where you see society headed, if that makes sense. So that's another reason why I don't have my drip on, because I use my drip to buy into recurring investments which pull from my buying power. Of course, I have my bank account as a backup, but I prefer just mentally I prefer using the money I made to do that. It's almost like I'm using one business to fund another, and of course they're all working for me, but they're working independently of me at the same time. So I love the idea of that. Very beautiful, in my opinion. Um, and the last reason, probably the most petty, is just is just like how my share amounts look, if that makes sense to anyone. So, like having 1.25 shares of a company versus having 1.260933705. I just like the look of this. You know what I mean? Like Gap, I used to have my dividends reinvesting into Gap. Three shares, I had like 3.176 share, let's say for example. I honestly sold the extra little the tail just get my 3 shares. And probably not the best thing to do because Gap has been like such a good performer. I regret buying only 3 shares of Gap, and they do pay a dividend as well. Not their dividends haven't been raising or going higher, but they do pay a dividend, and I'm up way over 100% on Gap so far. But we can look at Gap since we're here. 3 shares of Gap up $117. I easily doubled my money on Gap. 0.6% of my portfolio. I bought in at like a 5% yield, I think, and now I guess that makes sense because their price has doubled since I bought it. Now their dividend yield has halved, so it kind of makes sense. But we're yeah, sold 93 cents worth of Gap because I had that extra little bit of shares just from the dividends buying back, and really should have probably just bought into more. Maybe instead of going from 3.04 shares to 3 shares, if I should have gone to 6 or 10 shares. I mean, it's not even that expensive. I bought at $11. Look at that thing. Probably should sell. It's not a lot, but it's, just the mentality, the idea behind it, the mindset behind it. Don't do another Tesla situation. If I had sold out of Tesla, would have been gold, and I probably would have bought back in at these prices. But just fingers crossed they rise in the future. That's all we can do. Hope for good earnings, and keep our eyes open. If we do have to jump ship, we have to jump ship. So yeah, those are my 3 reasons. It's very straightforward, guys. Some of them is not super serious, but yeah, my dividends, I love them. One day I do want to use them to fund my actual life. Is the whole goal. I'm not sure when that will be, but between this and my Roth, that's the ideal. Um, like using them to buy back into companies at this point in time. Of course, I could buy back into the same companies, but I just don't like seeing the trailing decimals. And I do go and buy back with in like let's say a pretty number of shares version. I do go and buy back the underlying anyways, so I'm still covering that that gap. And yeah, I mean, at the end of the day, it's what I want to do. So if I want to turn my drip off, it's really on me, right? But that's the portfolio. I look forward to seeing you guys this month. The end of this month, we'll be doing a March dividend update, and little spoiler, March will be your biggest month by far ever in dividends. Absolutely crazy. But thanks to, of course, companies like Ford. It's gonna be a big month, so I'm very excited for that video. Like and subscribe. Definitely subscribe if you want to see that in the future, in the very near future. It should be in about 2 weeks. Um, Probably that Friday afternoon. I don't know when I'll do it, but drop a like, drop a subscribe, drop a comment. If you have your drip off or on, why maybe. I'll see you guys in the next video. Thanks for watching. Peace.